Welcome to the next session. In this session, I am going to explain about input tax credit. Dear friends, input tax credit is a core concept of GST. Input tax credit is available for GST paid on input, input services, and capital goods. We have learned that one of the important flaws or demerits of the previous indirect tax system was its cascading system. That means the tax on tax. In the earlier system, the credit was not available for taxes already paid at various stages of supply chain. The beauty of GST system is that the availability of a seamless flow of credit throughout the supply chain, leading to the removal of cascading effect on the tax. Therefore, input tax credit is one of the important features of the new indirect tax system, that is the GST. Before that, let us understand what is input tax and what is output tax. Input tax is the taxes paid on inward supply. That means when a registered person, purchases the goods from other person, when he pays the tax on the goods purchased or services received, that tax is called as input tax. That is a tax paid on inward supply. The inward supply is nothing but purchases. The outward supply is the sales. When the seller or the supplier sells the goods or supply the goods or services or both, he collects, suppose if such goods or services are subject to GST, the taxes on his supply. Then the taxes charged and collected on such sales, which we call it as outward supply, is the output tax. This output tax is the taxes collected by the supplier, and the input tax is the taxes paid by the buyer. The difference between input tax and output tax will be tax refund or tax payable. The output from the output tax, if the input tax already paid is deducted, the remaining amount becomes tax payable. That is why the input tax paid earlier will be deducted from the output tax collected, the remaining amount of tax payable by the supplier. The next topic is very important to understand, that the eligibility for availing the input tax credit. Who is eligible to avail input tax credit, and what are the conditions to avail input tax credit? The first important point here is only the registered person can avail input tax credit, and only the registered person is eligible to take input tax credit as per section 16 subsection 1 of GST Act. When we go to the second aspect, the conditions to be satisfied in order to avail the input tax credit. Let us see one by one what are the conditions to be satisfied in order to obtain or avail the input tax credit. The first and important condition is that the registered person who is claiming the input tax credit has to possess the important documents, important tax paying documents. Important tax paying documents are invoices, debit notes, and he must possess these important documents in order to claim the input tax credit. The second one is the receipt of goods or the services. The recipient of the goods purchased by him or the recipient of the goods purchased must possess the goods or services. That means he must receive the goods. The, the registered person should have received the goods or services or both in order to claim the input tax credit. The third one is the payment of tax to the government. This is nothing but the taxes charged in respect of supply as actually should have been paid to the government subject to certain provisional availment of credit by the supplier. Unless the taxes is actually paid by the supplier, input tax credit cannot be availed. And the next one is furnishing of returns. This is very important. The supplier has to furnish the monthly return and the monthly return in this prescribed format. Particularly, the recipient of supply is required to file the details of inward supplies. Suppose if the supplier upload or file GSTR1 on the 10th of the next month, then 15th of the next month the recipient has to file GSTR2. That means the recipient of supply is required to file the details of inward supply in GSTR2 by 15th of the month succeeding the month of receipt of supply. With the furnishing of such details in GSTR2, electronic credit ledger reflects the relevant input tax credit. Till then, input tax credit cannot be claimed. And the next point is very important. Input tax credit cannot be availed on certain items if the depreciation is claimed on the tax component. Next one is a procedure for ITC reversal. Suppose if the recipient fails to pay the supplier within 180 days, then the amount of such credit availed needs to be added back to the output liability along with the interest at 18% per annum. Then credit shall be allowed subsequently even after that on the payment of supplier, payment made by the supplier. That means the amount of credit can be availed within that particular period subject to fulfillment of such conditions. There are two exceptions. As I said, if the recipient fails to pay the supplier within 180 days, the amount of such credit will be added back to the output tax liability and he has to pay along with the interest at 18% per annum. This has two exceptions. Number one, supplier, in this case, supplies on which tax is payable under reverse charge mechanism. This rule not applicable. And in case of deemed supply without any consideration, this rule not applicable. And next point is the time limit for availing input tax credit. This is very important. The time limit for availing input tax credit is the 20th of October in the next financial year, or the due date of filing the returns. These two dates, whichever is earlier, will be the time limit. Let me give you an example. Suppose if a registered person sent an invoice, let me say date 25th April 2020 for the supply of goods to another person, let me say Mr. Y. Mr. X sent an invoice on 25th April 2020 to another person, Mr. Y, for supply of goods for which payment recovered or received on the same date 25th April invoice is sent and 25th April amount is received. Then now the another person, the recipient, filed its annual report on 25th May 2020. Let me say he files returns on 25th May 2020. These two dates keep in mind. The date, the first one is 25th April 2020 is the date of sending an invoice and amount received, the same date. And 25th May 2020 is the date on which the recipient files return. That is the date. So in this case, input tax credit can be taken on specified date, that means on 20th October 2021. 20th October 2021 is the next financial year on which input tax credit can be taken, 20th October 2020 or 25th May 2020. 25th May 2020, whichever is earlier. The 25th May 2020 is the date of filing the return, is earlier than the next date, 20th October 2021. Therefore, the time limit for availing the input tax credit is this date, that is the 25th May 2020. Let me go to the next one. Next point is goods. Suppose goods received in lots or in installment. What is the due date or what is the conditions? In case the goods against an invoices are received in lots or installments, in different lots, the goods are received in different lots and different installments, the registered portion shall be eligible for input tax credit only after the last installment of goods or the last lot of a goods received. This is important aspect. Now another important point here is the negative list are ineligible inputs or blocked credits. Let us have a brief discussion about these items. This means the items on which input tax credit is not eligible, not available. The first one is the motor vehicles. On this item, input tax credit is not available, input tax credit is blocked or it is in the negative list. But suppose if motor vehicles, usually except they are used for furtherance of the business or providing a taxable services, in that case that is not applicable. Motor vehicles, just other than those motor vehicles used for furtherance of the business, for further business purposes or for rendering the taxable services. Other than that, motor vehicles on which input tax paid is not eligible to be deducted or claimed. And the second one is the food or beverages or outdoor catering. The food, beverages and outdoor catering is also not eligible for input tax credit. Usually these are the items which are on which goods are used for final consumption. And beauty treatment, health services, cosmetic surgery, on this also the input tax credit is not eligible. But there are certain exceptions where such inward supply is used for making the outward taxable supply of same category of goods or services, or as an element of taxable composite or mixed supply. Then the exceptions are there. Therefore, in this case, input tax credit will be available. Otherwise, the beauty treatment, health services, cosmetic surgery, on this for inward supply, input tax paid is not eligible for ITC credit. Then ITC credit is not also eligible in case of membership of a club, health and fitness centers on which tax paid. Rent a cab, life insurance, health insurance also not eligible. But this is except for employees, means if it is provided to the employees by the employer, then it is exception. Input tax credit can be claimed. Otherwise, rent a cab, life insurance, health insurance, in this case, input tax credit not available. Travel benefits to employees on vacation is also not eligible. This is in the negative list. Then works contract services for construction of immobile property other than the plant and machinery, except where it is input service. It is an input service for further supply of the same. That means, so input service, that is works contract services for construction of immobile property, it is in the negative list. Then input tax credit is not available. Then the goods or services used for construction of immobile property, on which also input tax credit cannot be claimed. Then goods or services where tax is paid under composition scheme, it is in the negative list. Goods or services received by a non-resident taxable person. So except the case where the goods or services imported from the non-resident taxable person, if goods, services or services received by a non-resident taxable person, that means other than the input tax credit is not available. And the goods or services used for personal consumption, it is very, very clear. See, when we purchase the goods for own consumption, there is no output tax. We are not going to sell those goods to another person, and we are not collecting any taxes on that because we are consuming ourselves. That is the whole idea. See, when we are purchasing certain things and paid input tax, and on those goods or services we are not selling and not collecting output tax, how can we claim input tax credit? Input tax credit should be deducted out of the output tax collected. When there is no output tax, when we are not collecting any output tax, there is no question of deducting input tax. That is our whole idea. And input tax credit is also not available for goods lost, goods stolen, destroyed, goods written off. This is also very clear because we are not going to sell these and we are not collecting any output tax. Then the goods disposed by way of gift or free samples, that is also remain the same. The tax paid after the deduction of tax evasion. See, this is another typical case. Suppose earlier the supplier or the dealer or registered person has evaded the tax. Then the authority detected the tax evasion cases and collected the amount by demand from such a dealer. While paying such taxes due to detection of tax evasion, input tax credit cannot be deducted out of such. It is going to be a penalty. Therefore, again, when we are transporting the goods, then the person who is carrying the goods through any vehicle while in transit, he must possess the invoices or the documents. If there is no document, the authority will confiscate. The authority will come and seize the goods, confiscate even the vehicle also. Therefore, issuing the invoice at the time of issue of dispatch of the goods is very, very important. And the person who is carrying the goods from the place of purchase to the place of the recipient's place must possess the document, must possess the invoices. Therefore, at this time, if there is no document and the authority seizes the goods or detain the goods, and input tax credit cannot be deducted out of such goods. These are the negative list. So let me go to the next aspect, is order of ITC adjustment. I told input tax paid will be deducted out of output tax. Then there are two types of the transactions basically. One is intrastate supply and interstate supply. When there is an interstate supply, IGST is involved. That means the supplier has to collect IGST and pay to the government. When there is an intrastate supply, that means within the state, suppose if the goods are bought by a dealer in Bangalore from Mangalore, it is called intrastate supply. In this case, two types of the taxes the supplier has to collect. One is a CGST, another one is SGST. These two taxes should be collected in case of intrastate supply. In both the cases, there will be a input tax. If there is a interstate supply, there will be a IGST input tax. And when there is a intrastate supply, there is a CGST and SGST input tax. Similarly, that means output tax. Similarly, when we purchase goods interstate, we have paid IGST. When we purchase goods within the state, we have paid CGST and SGST. That means when we sell goods to another state, when we sell goods or supply goods interstate, we are collecting IGST as output tax. When we supply goods within the state, we are collecting CGST and SGST. Out of the output tax collected, when we buy goods, when in case of an inward supply from another state, what we have paid is the IGST. When there is an intrastate inward supply, that means we have purchased goods or services or both within the state, we have paid CGST and SGST. The set-off of these IGST, SGST, CGST credit is to be made as per the rule. So this table gives you an idea as to in which order IGST, CGST, SGST, Union Territory GST has to be adjusted. It is very clear. Suppose the explanation is very clear. The IGST input tax can be adjusted with IGST first and then CGST and then SGST and then UTGST in this order only. And if there is a CGST credit, that can be adjusted first only against CGST, then against IGST in the same order. That is why number is given there. In case there is an input tax of SGST, that can be adjusted first against SGST and then against IGST, but not against CGST. This is the same in case of UTGST also. UTGST can be adjusted first with UTGST and then IGST. And very important thing here is intrastate input taxes cannot be adjusted one against another. That means SGST and CGST cross utilization is not allowed. CGST cannot be adjusted against SGST. SGST cannot be adjusted against CGST. They can be adjusted only against IGST. This is the order. It can be explained another way. See, the CGST, credit of CGST goods to be utilized sequentially, that means CGST first and then IGST. This is called a transaction within the state, intrastate transaction. SGST can be adjusted first against SGST first and then IGST. And cross utilization of CGST and SGST is not permissible. In case of interstate transaction, IGST, credit of IGST to be utilized sequentially, that means the first IGST against IGST and again next if available, further credit available, CGST and then SGST. Number 1, 2, 3 in this order only adjustments shall be made. Now let me take an example here. Now when we take an example, in this case Mr. Rakesh from Mysuru registered a dealer, not opting for composition scheme. He is not opting for composition scheme. Very important, because the registered dealer who has opted for composition scheme is not eligible to claim input tax credit as he sold goods outside the state, inside and within the state and outside the state. His tax credits for the month of January 2020 are given below. So output tax, these are the output tax Mr. Rakesh collected. That means he sold interstate, collected 40,000 rupees output tax. He sold 12,000 rupees SGST and CGST because he has supplied within the state. Similarly, Mr. Rakesh has bought goods from interstate, 20,000 rupees input tax paid on this, and he bought goods within the state on which he has paid 18,000 rupees CGST, IGST or SGST equally. That means there are both output tax and input tax. So how to adjust these two? Let me show you with this. See, the output tax in the first instance is IGST output tax 40,000, CGST input tax, output tax, and SGST output tax. From the output tax, input tax paid should be deducted. Input tax paid is deducted. Output tax collected is 40,000 IGST, 12,000 CGST, 12,000 SGST. Then out of this output tax, that means a tax collected from another recipients, input tax that Mr. Rakesh has paid will be deducted. Input tax paid will be deducted 20,000, 18,000, 18,000. These are the tax he has paid earlier. And out of the IGST output tax, input tax paid only 20,000. That means if there are other no transactions, he has to pay to the government 20,000 rupees as tax liability. But this is not the case. Here there is a surplus. In case of CGST and SGST, output tax is 12,000. That means the tax collected is 12,000 each. But the taxes earlier he has paid is 18,000 each. Therefore, the surplus he has paid more, 6,000 more in case of CGST and SGST, 6,000 plus 6,000, 12,000. This 12,000 rupees will be adjusted surplus against the tax liability of the person in case of the IGST. That means CGST surplus will be adjusted against IGST first and completed. And this is 20,000 rupees tax liability will be adjusted against 6,000, and then remaining 6,000 rupees SGST. These two 6,000 rupees is GST and CGST surplus will be adjusted against the tax liability in case of IGST. These two 12,000, 6,000 plus 6,000, 12,000 is deducted from 20,000. Therefore, net tax payable by Mr. Rakesh is 8,000. That is a IGST payable to the government. Let me go to another example. The next example is this one. Ms. Padmaja from UP, a registered dealer. Let me minimize it. Registered dealer, not a composite dealer, has provided the following input and output tax details for the month of December 2019. Here also the dealer has collected 20,000 rupees IGST, 48,000 rupees each from the intrastate supply. And intrastate supply on which tax collected is 48,000 each. Intrastate supply, inward supply on which taxes paid is 16,000 each. So input tax is the taxes paid when she has purchased the goods or services. She has paid 16,000 rupees each, and when she sold goods or supplied goods inside the state or within the state, she has paid 48,000. She has collected 48,000 rupees. So let us go to the Excel sheet how this adjustment is shown. This is the second case. The output tax means the tax collected. This dealer has collected 20,000 rupees IGST and 48,000 rupees CGST, 48,000 rupees SGST. These are the taxes collected when the amount of sales made. Out of that, the taxes paid by her for the goods purchased earlier will be deducted. That is an input tax. 72,000 is an interstate purchase. This is the tax paid by her for interstate supply, interstate purchase. 20,000 rupees is the tax collected by her for interstate sales, and 72,000 is the tax she has paid. 52,000 rupees more. This is the surplus. Minus 52,000 means this is the surplus amount of input tax. She has paid, collected 20,000 rupees, but she has paid 72,000 rupees, but her electronic credit ledger shows 52,000 rupees input tax eligibility. Similarly, 48,000 is the output tax collected, but she has paid lesser than that. She has paid 16,000 rupees each input tax. Therefore, she has to pay 32,000 rupees each CGST and SGST to the government. So 32,000 rupees is the tax liability. But since there is a surplus of IGST, IGST will be adjusted against CGST and SGST. Now let us go to the order. The surplus of IGST, 52,000 rupees, will be adjusted first against CGST. So therefore, out of 52,000, 32,000 rupees credit is adjusted first, and remaining amount is 20,000. Only 20,000 can be adjusted against SGST. Therefore, 32 out of 32,000 rupees liability, she has to pay only 12,000 rupees to the government. This is how the adjustments are made in case of the input tax credit practical questions. So the viewers can practice on this example. See, purchase of raw materials A from a supplier of Mysore for rupees 4 lakh at 5% GST. Purchase of raw material B from Mumbai for 12 lakh at 12% GST. This is a interstate purchase, and the first one is intrastate purchase. Secondly, sales of 4 lakh to Hubli, intrastate sales, intrastate outward supply at 18% GST. Supply of goods worth rupees 3 lakh to Mangalore. This is also intrastate supply, outward supply at 12% GST. So we need to calculate in this case first output tax. What is the output tax? Sales of 4 lakh to Hubli. This is the output tax, that is the CGST, 9% CGST, 9% SGST on 4 lakh to be calculated, that is output tax. Again, supply of goods worth rupees 3 lakh to Mangalore, this is also output, outward supply. Therefore, 12% of GST on 3 lakh rupees, this is CGST 6%, SGST 6%, both will be output taxes. The input tax will be calculated on purchase of raw materials within the state and interstate. We get the tax liability or input tax credit. And for now it is enough. In the next session we will discuss about input service distributor and how input tax credit are adjusted or apportioned among the various input service